Hello and welcome. You're watching Money 9. I'm Sakshi Batra, and on this show, we discuss everything about markets and fundamentals to help you understand which way are the markets headed and how should you be approaching the current markets and where are the investment opportunities that you can focus on. To talk about all of this and much more about markets, I have with me a very special guest joining in. Mr. Kranti Batini from Wealth Mill Securities joins in on this edition of Market Meter. Good afternoon, Mr. Badini, and thank you so much for taking the time for us. Well, the market is surprising yet again because both the major indices, Nifty and the Sensex, are trading near all-time high levels. Your thoughts here, despite all the concerns of whether the US Fed will be hawkish or whether the China's Evergrande effect will have something to do with the Indian markets too. All of this have been shrugged by the Indian markets and they're climbing higher. Your thoughts here?
Sakshi, see, yes, of course, we are at again back at all-time highs, and market have a tendency keep on surprising the most of the people in the market. And today is a day where markets are nearly both the indices are up by more than 1%. What does it mean is it shows the gush of liquidity and also the buying interest is emerging towards Indian markets. So my suggestion to the investors at this point of time is enjoy this ride and try to have the quality stocks in your portfolio, and wherever the weeds that came into your portfolio knowingly or unknowingly, this is the best time to throw away those weeds, throw away those wrong stocks from your portfolio and have a quality portfolio, and look for quality always. That is the mantra for these markets, and stay invested for a long time, and any correction market gives, try to re-enter and stay invested.
Yes, absolutely. Those are the wise advice points that everybody should be definitely keeping a note of as you're investing at these current record high levels, the strategies that you should adopt. I first wanted to talk a little bit on some of the pockets that have been showing a lot of traction of late. The realty space, for example, last 2 or 3 sessions, we have seen remarkable upside on this index. What is really, happening here in the realty space? Of course, we have discussed this space even before to understand whether there is a structural demand change that is really happening. But what suddenly has happened? Is it only sector rotation that is taking place? Fundamentally, have things changed for the realty sector? How are you analyzing it?
Sakshi, if we see the data, uh, interest rates at all-time high levels. We heard about the prominent banks, the lenders in the market coming to a single-digit interest rates at 6-7%, nearly a decade back. Right now, after a decade later, right now, the interest rates towards the housing sector, it can be commercial, are now at a single digit, so which gives a booster to these real estate stocks. And so once the real estate interest rates are at a lower level and the economy is back coming back on its foot, and also we see the businesses are opened up currently, so the buying interest is emerging across the segments. It can be residential, it can be in the commercial segment again. So that's what the rally we are witnessing in the reality index is concerned. And also, if we compare the global peers with Indian reality stocks with the major Asian Pacific reality stocks, Indian reality stocks are one of the very value stocks available at a very attractive price. So that's why off late we have been witnessing heightened activity stocks like Godrej Properties, which have a pan India presence and focus is on Maharashtra, and companies like Macrotech Builders, and also DLF. Also, after a long time, we are witnessing some kind of heightened activity in reality stocks. Some kind of value buying is emerging in these kind of pockets.
Hmm. Absolutely, sir. So I also wanted to take your comment on one stock which has been off late coming into a lot of news, and that is ITC. After a long haul of sideways momentum, we are again seeing some promise being shown to ITC shareholders by the stock because we've been seeing continuous traction here. Anything that you read into the fine lines as to whether things are improving for good, and there is perhaps chance even for new investors to enter right now?
Sakshi, it's like $1 million question 15 days back.
Yeah.
And a lot of value is emerged in ITC, and
Yes.
also the valuations looks very attractive. Just to inform you, the one of the largest wealth creator in the world is Marlboro. It is a tobacco stock in US. Whereas
Yeah.
in India, if you can see all sort of jokes on ITC from past
Yeah.
6 months.
Yeah. Yeah.
So what does it mean is the ESG norms are applicable in India, and the foreign institutional investors, while they are investing in uh, uh, these kind of tobacco stocks, they are much more concerned and selective in terms of selecting the stocks. But
Hmm.
whereas the COVID is rampant up in last 1 year, we are all aware. COVID is directly related to lungs, as we aware. So, and since people are staying in homes, the smoking habits have came down, and also people all of a sudden turn health conscious. So
Yes.
the demand, and still ITC is a Indian tobacco company, and majority of the revenues comes from tobacco. So
Hmm.
it's going to have a impact on their earnings in the coming days. And always because of the inelastic demand they have, the product it carries. So the taxes have been always goes up with respect to their products. So that's
Hmm.
why ITC was a laggard from quite a long time. And there are other segments of business like the hotels and other segments also. They got impacted due to COVID. So
Yeah.
right now we are back in the unlocked trade. So some kind of traction what we are witnessing in ITC. So I am not going to go and jump and buy ITC. Those
Yeah.
people who are invested, they can stay invested in ITC.
Okay, understood that, sir. So also we're seeing the broader markets are performing very well. Is that a space that you're looking at currently?
Such I could not able to hear. Pardon
The
me.
broader markets, I wanted to ask your view on the broader markets. The mid caps have been taking all the limelight of late. Any thoughts here as to, because there was a whole lot of fear that after overvaluation, this space will now see a deeper correction. We didn't see too much of a correction, only a minor blip, and again they're going up. Your thoughts here, sir?
Sakshi, in mid caps, a minor blip can change the entire valuation demographics of mid caps. So be selective while selecting the mid caps. That's why we always mention the quality of their earnings and earnings visibility. These are the both the both the areas investors need to look into that. They can, if still, if I have to mention, I'm still looking for some quality mid caps to add in our portfolio at these
Okay.
valuations, but it all completely stock specific. I'm
Hmm.
not worried about the what the indices are doing. Okay, they are doing their activity, and we are doing our activity in mid and small caps, but
Right.
selective to the bargain buying where value is there.
Yes, absolutely. And some of the mid caps that you already recommended on our show have actually done some, some stellar performance we've seen there, especially in the IT, mid cap IT space, which for a brief period of time had a very good sharp outperformance. And you had at a very early stage called about those stocks back in January 2021, the likes of KPIT Technologies and Quick Heal. Both of these stocks have actually seen a very sharp return, peak returns of say 80, 90, and even 100% kind of returns. So congratulations to you on that. I wanted to just take a view as to what should investors who listen to you and pitch those stocks at that level, what should they do now?
Such with respect to KPIT Technologies is concerned, we advised this stock at a very early level at
Yeah.
in the month of April. So the stock
Yeah.
has delivered nearly 100% returns from the time. And KPIT, they are into the mobility services, and the mobility services going to see a big traction in the mobility services are concerned. So, but since the stock has run up a lot from past, I can say last 4 months, and it delivered nearly 100% return. It is wise for the investors to book some profit from the table since the stock has delivered nearly 100% return in past 5 months. It is better to take profit from the table, and they can re-enter into the stock. Take back your capital. Capital is precious to every investor. Whenever a stock give 1x return in a very short span, take back your capital, and the bonus you can remain stay invested, and the remaining money, whatever the profits investors takes from the table, they can reinvest again if the market gives a dip, and they can re-enter into the stock.
Sure. Okay. And what about Quick Heal, sir?
Quick Heal, I can advise the investors to hold on. Uh,
Okay.
the first quarter results are not that much attractive for Quick Heal. The main reason is because their sales is one of the OTC over the counter sales. Because of the lockdown, it impacted the first quarter earnings, despite they're into the cyber security earnings, cyber
Mm.
security space. So we can see traction in going forward in Quick Heal Technologies, and also they're focusing on enterprise model right now. And the company is sitting at nearly 200 crores cash. It's a zero debt company, so they can do some cherry picking, and in terms of the acquisitions are concerned in this
Sure.
space. So the stock is completely undervalued at current price point also. So investors can, despite of making 80% profits in the stock from a level of 160 to today at 240, they can
Sure.
stay invested and hold on to the stock. Any dip market gives, they can further accumulate this stock.
Okay, understood. And for today, because the markets are near record high levels, is there any stock that you would like to recommend for today as well?
Sakshi, we have a stock from pharma sector, and pharma
Okay.
has been laggard from past, I can say, last 45 days. And
Yes.
most of the stocks in pharma are corrected. And
Mm.
Wakard, we advised in the earlier rally at nearly 420 levels. It went to
Yeah.
800, and again it came back to the square one. Various reasons of the market condition. It can be a technical adjustment, and also some kind of profit booking the stock has witnessed in Wakard Pharma. What I can see in the stock is it's a value buy. It available at a very attractive valuations of nearly 5,000 crores market cap, less than 5,000 crores market cap. So
Mm.
investors with high risk appetite, definitely they can take a pie of Wakard at this price level. Stock will definitely, it's going to reach its previous highs in the coming next few quarters. And also the new products they are going to launch, like Sputnik single dose vaccine, and also the current ongoing Covishield, means the AstraZeneca vaccine, what they are making in UK, it's
Yes.
going to add extra value to their balance sheet in the days to come. So I advocate investors to accumulate Wakard Pharma at this price juncture, and
Sure.
they can accumulate from 430 to 450 levels, and any dip further market gives, they can keep on adding into their portfolio.
Okay, understood that. So Wockhardt Pharma as a new recommendation even today can be added and accumulated for a long-term period for 30% upside over the next 1 year. Thank you so much, Mr. Patini. Always a pleasure speaking with you and getting your insights on the markets.
Thank you,
All
Sashi.
right. Let's move on to see how the markets are also trading at this point. Well, at half time, and we are near the record high levels for the benchmark indices. The Sensex and the Nifty both up over a percent, 1.3% uptick for the Sensex right now. It's trading at 59,700 and thereabouts, with an addition of 780 odd points in intraday. Talk about the Nifty 50 also, 1.25% uptick. It's added about 219 odd points, 17,766 is the current level that you're looking at for the Nifty. When we talk about the Nifty Bank, that is where all the action is, almost 2% of an uptick and 700 points added to that index as well. And when we talk about the broader markets, it's the mid caps that are shining brighter with about 1.2% uptick for this index at the moment, with about 7.7% of an uptick for the small caps as well. Sectorally speaking, you'll be able to see that a whole lot of sectors are still trading in the green. Of course, in the initial trade, we had seen all the indices were up and about. Right now, you can only see media stocks or media index looking at slight profit booking, but rest of the others are still holding up, with the realty stocks really gaining the limelight. Apart from that, it's the banks and financial services that are also up in trade at the moment. Talking about the gainers and the losers, you'll be able to see that, a lot of banks, financial services are holding up. 5.6% or 5.9% for Bajaj Finance, Axis Bank, Tata Motors, Coal India, and L&T are the gainers for today. On the other hand, you'll see slight losses coming in for some pharma majors like Dr. Reddy's. Shree Cement is down in trade. FMCG major Britannia is seeing some cuts. BPCL and HDFC Life, the other laggards at the moment for now, currently, but not too much of a loss. And it's various stocks from different sectors that are finding themselves a position in the losers category right now. But overall, markets are very buoyant in the current session. we'll have to keep you posted as to how the markets progress from here and what should be your strategy going forward from here. Stay tuned with us and log on to Money9 website to read up all the latest articles on markets and personal finance. Thanks for tuning in.